Hi everyone, welcome to the US CPA FAR classes. We are in continuation of key term. This is your part 2 of the key term. In this particular video, I'll be walking you through in detail about International Ethics Standard Boards for Accountant, what exactly they do. Then we'll be discussing about AFRF, we'll be discussing about FASB, we'll be discussing about GAAP, we'll be discussing about sources of GAAP and Security Exchange Commission. All this topic will be covering in this particular video, which is your part 2 of key terms in the financial accounting and reporting examination.
Now, next topic we are jumping. Any doubt before we jump on to the next topic? AICPA Code of Professional Conduct, fine everyone, and Code of Ethics, right? Any doubt before we jump into the next topic? No response. I presume it's yes. Okay, so next topic we have is International Ethics Standard Board for Accountant. That is called IESBA. This term also you will see in both in FAR as well as in audit exam. It is actually an independent standard setting organization that serves the public by creating ethical standard for professional accounting. And it's not only about CPA who adopted this International Ethics Standard Board, but there are many other international professional bodies, like whether it's CIA, this is, if you heard about IIA, International Institute of Internal Auditor, right? They also follow IESAB. Have you heard about CISA, right? That is for IT auditor. Their institute is ISACA, right? They also follow International Ethics Standard Board account. Right, so these standards which International Ethics Standard Board for Accountant which the issue is being accepted by many professional bodies across the globe, and they issue the standards which help the public in creating the ethical standard and ethical values to the professionals, right? And the IESBA also facilitate the convergence of international and national ethical standard through the development of internationally appropriate code of ethics. So it helps, like when you collaborate with IESAB and you already have, let's say for example, AICPA, right? AICPA, they also have code of ethics. When they collaborate with the IESAB, they help in more standardizing the code of conduct and code of ethics, which is being widely accepted across the globe. And that helps in enhancing the quality of the AICPA code of conduct and code of ethics, right? So it's basically IASB is a body who issue code of conduct at an international level, and AICPA you can say collaborate with them to enhance the quality of their code of conduct and code of ethics to make it to the global standard code of conduct and code of ethics. There might be certain differences, like how IFRS and US GAAP, there are certain differences, but they are trying to best align. Same way, there might be certain differences between IASB code of conduct or code of ethics and the AICPA code of conduct or code of ethics, but they both are trying their best to align to the extent possible, right? The next would be principle of professional conduct and ethics. So there would be certain principle as a member of AICPA which we need to follow. The first one is responsibilities of the CPA, that is also being issued by the AICPA and we need to adhere to, right? Second is public interest protection. So we as a CPA always need to keep in mind the interest of public, because AICPA is a professionally recognized body and across the globe people trust on AICPA member like us, right? To maintain that trust, we also need to follow certain rules and regulation, that is code of conduct, code of ethics, responsibility of the CPA, and the public interest protection. Whatever the action or reaction we are doing, we always need to keep in mind the public interest. because people trust on CPA, right? Next one is integrity. Integrity and ethics. Whatever we do, whatever we behave, whatever we react, and however we perform, it should be with the full integrity, right? And objective and independence. So whatever the, you can say, opinion we are providing, or whatever the attestation, examination, or signing things which we are doing, it should be objective. Objective and independent both. What is objective? Objective means unbiased. Make sense? What is objective? Are you guys with me?
Yes, sir.
What is biased and what is unbiased opinion?
Not favoring any particular party or your client that way, and giving an opinion which is based on facts and
Yes.
not biased towards
Sir,
any.
giving the opinion ethically, like,
Yeah, Kashish, you are saying something?
so giving an opinion without any favor or in ethical terms is a, you know, objective.
Yeah, absolutely right, Kashish and Ayush, both of you. So objectivity and independence. What is independence?
Sir, he or she is independent while doing the audit.
What does independent mean here?
So not putting any pressure of, you know, external bodies or external authorities.
Anyone else would like to add? Vineet, Rahul, Pranjali, Pulak, Hemant.
No material or immaterial interest in client or something like that.
Yes, that's one of the point. Absolutely good.
Sir, independence should be not under the influence of management. And he's working independently. If he's working independently, then only can he be unbiased.
Yes, that is the reason objective and independence are together. Yep. Anything else anyone would like to add? So independence means you do not have any direct or indirect interest or influence in the entity for which you are evaluating, right? Whether you are giving examination, agreed upon procedure, review, opinion, or maybe audit or attestation, right? So all those evaluations should be by the independent auditor. If you have seen, like, most of the time, you might have heard this term very much interrelated called independent auditor. So auditor independence is must when it is coming to the signing of financial statement as audit report or issuing the audit report, review report, examination report, agreed upon procedure report, right? Attestation report. So there independence is mandatory. The next one is due care. What is due care? Any idea? Any idea what is due care? And why as a CPA we need to give due care? Rahul?
So due care is, auditor, it allows auditor to obtain reasonable assurance so that there are no material risk in the financial statement.
But what is due care?
The due care means basically adhering to the policies, taking care of all the defined procedures, basically while performing the audit. So you need to be due. So basically, a part of due diligence is also a part of due care.
No, due diligence is like work. Due care is a behavior.
The due care refers to the degree of care which is expected from a reasonable person while he's conducting the audit to ensure that it is free from material statements.
Yeah. Anyone else would like to add? Yeah, Rahul, Santrupti, Pulak.
Agree with Ayush.
No, that is okay. I also agree. But would you like to add something more?
Sir, I think due care means staying alert and attentive and taking care of all the factors influencing the financial statements, be it external or internal, or any error or omissions. That's care.
Yeah, very good, Akash. Yes, so due care is basically a behavior as a CPA we need to adhere to or follow to. Like similarly, we should taking care of like client assets. Similarly, how we are taking care of our assets, right? And to the situation when we are auditing, we all need to look at holistically 360-degree rather than in isolation. For example, one of your customer, like one of your client customer, is going to be bankrupt, right? And let's say we are 5 team member who are conducting like audit, and one of the team member is doing audit of account receivable, and that person who is doing audit of account receivable has identified that one customer is going to be a bankrupt and the company may have challenge in collecting the money, right? Would that problem be considered only to the extent of account receivable, or if let's say that is the major customer, would it be impacting my overall financial statement? So that due care as an auditor we need to give. We should not be considering any problem in isolation. We should be looking at the overall impact on the financial statement. One is that. Second is in terms of behavior, like professional skepticism, right? Questioning mindset, right? So and taking care of the client asset in the same fashion as it you will be taking care of your own asset. So there are a lot of things which comes under the due care, but this is being a basic expectation from the CPA that he or she will be doing the due will be ensuring the due care in his or her behavior when they are working on any engagement. Right? Make sense? Next one is scope and nature of service. So that also need to be appropriately defined before starting any work. So scope and the nature of service need to be properly defined and must be in a written. So this is about like principle of professional conduct and ethics. Now we are jumping onto the next topic. So this next topic is applicable financial reporting framework. Have you heard about this term, financial reporting framework? Have you heard this term
Yes.
before? What?
Yes, sir.
What are the financial reporting frameworks and what exactly it's mean?
It's a GAAP, IFRS, and
Yes, yes, you said right, sir. So financial reporting framework are basically the framework adopted by the management, and when it is being appropriated by those charged with governance in preparation and fair presentation of their financial statement. It can be US GAAP, it can be Ind AS, it can be IFRS, or it can be specified framework required under the specified law. Like for example, for tax purpose, if any specific format is being required for the preparation of financial statement, right? For if you see banking regulatory environment, they have separate framework or format for preparation of the financial statement of the bank. So those framework is also called applicable financial reporting framework. Make sense? What is applicable financial reporting framework? Everyone good?
Yes, sir.
Yes,
So
sir.
a financial reporting framework is actually a set of criteria used to determine the measurement, recognition, presentation, and disclosure of all material items appearing in the financial statement. What is measurement? Any idea what is measurement? And why it is important for the financial statement?
Sir, measurement is basically the amount at which the transactions are being recorded and whether that amount is correct and relevant or not.
Yeah, so measurement is like valuation, right? So for rightly you have said, Ayush, like measurement is basically at what value the transaction need to be recorded and posted in the books of account. So I'm sure you might have heard a lot of time fair value measurement. Yes, no? Being in
Yes, sir.
accounting profession, I'm sure this word is very much commonly we might have heard fair value measurement. Yes, no?
Yes, sir.
So what is fair value measurement? Is valuing the respective assets liability at the fair value, which is the market value generally, right? Same way the transaction also need to be do at fair value or need to be measured at what amount they need to record for account for. Second is recognition. What is recognition? Any idea what is recognition?
The recognition would be the time we are, recognizing a particular transaction or a happening in the books of accounts.
Yes,
That
recording basically.
should.
Absolutely right. Yeah. So recording of, recognition of revenue. I think this is very much buzzword from last 2-3 years. You might be heard about revenue recognition, right? Same way the accruals for the expenses, recognition of the assets, recognition of the liability, recognition of the provision, right? So that is very much commonly used for the recording. The next is presentation and disclosure. What is presentation and disclosure is all about?
Like,
Any
sir,
idea?
presentation means like fair presentation of all the materials that have been provided by the management, and disclosure of all the materials, like
Yeah.
whatever
Absolutely.
is they have given, it's absolutely correct.
Anyone else would like to add, Kashish? In the last class, have we gone through some financial statement 10K or 10Q? Or not yet?
No, sir, we did not do it.
Okay, we'll do it today. Okay, so disclosure, presentation and disclosure is basically how you need to disclose the respective item in financial statement. What is financial statement? What are the key component of financial statement? Any idea?
Profit and loss account, balance sheet, and cash flow statement.
Balance sheet, cash flow statement.
What else?
SOC.
Statement of?
Statement of income,
Changes
balance
in
sheet,
equity.
Statement of equity, yes.
Okay.
What else?
debt,
Sir, notes to accounts as well.
cash
Yes.
flow statement,
Also moving.
So
statement
yes.
of
So
debt,
say that again.
statement of debt,
Statement
debt.
of debt. Okay, that's part of notes to accounts.
Okay.
What else? So far, you said balance sheet, you said income statement, you said statement of equity, you said cash flow, you said notes to account. There's one item still missing. Have you heard about OCI?
OCI.
हाँ सर वो उसी का पार्ट वो अदर कॉम्प्रिहेंसिव पीएनएल का ही पार्ट हो गया सर इट्स स्प्लिट इनटू टू
Yes. So other comprehensive income, right? So these are like 6 statements are called financial statement clubbed together. So these are 6 component of financial statement. Other than that, like say for example, whether audit report is being part of financial statement. No, it's an audit report. It's not part of financial statement. Whether MDA is being part of financial statement, it goes along with the financial statement, but it's not main financial statement. right? So sometimes it says industry reports goes along with the financial statement. Those all are supplementary information, go along with the financial statement. But in main financial statement, these are the 6 statement. What are the 6 statement? Statement of financial statement, statement of financial position, statement of income and expenditure, or you can say profit and loss, or other comprehensive income, cash flow statement, statement of equity, and the notes to accounts, right? So now let me take you to one financial statement. So this also I will share with you. This is this is, let's say, GM financial statement. So GM is General Motors financial statement. This is their 21 FY21 financial statement. So this also I'll share with you. But as we are in definition, or we are trying to understand the respective terms, it's always good to go through the financial statement also, just at a very, very high level, so that we understand what all things will be coming and where exactly it will be coming, right? So in this class, before we go for a lunch break, I'll send you this Microsoft financial statement as well as GM financial statement, and this will be your homework to go through these 2 financial statements, so that you have a logical idea, as in when we are going in different topic of the finance part, you can correlate in the financial statement where exactly it is being placed and how exactly it is being placed. So you can correlate all the theory which we'll be learning in next couple of weeks with the practical application when it comes to the financial statement, right? So this is 10K form. So 10K form is being submitted to the SEC by the issuer, right, for the annual financial statement. This is how it actually looks like. If you've seen the first page, it says annual report present to section 13 or 15D of the Security Exchange Act 1934, right? This is about the company, the detail of the company's basic stuff, and there are certain checkbox, right? I request each one of you to read through all these checkbox. It will help you in both exams, your audit exam as well as in your FAR exam. You get to know why these things are being submitted to the SEC and how, right? So now if you see in the entire financial statement, which they are submitting to the SEC, what all things comprise in it. First one, if you see the business, so they would be talking about like business. Then second, they will be discussing about the risk factor, which include like business risk majorly, right? And then some unresolved staff comment if they have any issues. Then the proprietary legal proceeding if they have. Then any specific disclosure for them, like mining safety disclosure, right? Then part 2, you will see it comes as an like more of MDA information, which is market of registrant common equity, right? Then selected financial data, which is kind of like MDA information. We'll go through one by one, don't worry. Just look at high level how it is being placed when it is being submitted to the SEC, right? 7th statement, if you see, is management discussion and analysis. This is important for you from both side, accounting side as well as audit side. When you work in an organization, in industry, then as an accountant, it will be your responsibility to draft this, prepare this financial statement, right? And when you go to the other side of the table as an auditor, then you need to audit it. So accounting and auditing is very much correlated and interrelated. So being a good auditor, you need to be a good accountant first, right? So accounting is the basic for entire CPA. That's the reason we call certified public
Accountant.
So that's a basic expectation that in accounting world, you are the most professional, right? Next statement, if you see, is the quantitative and qualitative disclosure about the market risk. Then financial statement and supplementary data. Here you will see the income statement, balance sheet, comprehensive income, cash flow statement, statement of equity, and notes to accounts. And in there is all these notes to accounts will be coming up. right? And then if you see part third, that is director report, executive compensation, security, ownership, and other relationship stuff. And then last one is certain exhibit to the financial statement and 10K summary. That's condensed financial statement. And this is how the oral financial statement will look like. But most important thing for us as an accountant would be the accounting part. I'll show you that also. So all this information as a CPA, if you are working in an organization, you need to prepare. So you should be aware of this. If you see, is the segment reporting basically. So if you see, they have industries and General Motors and the market share comparison. And if you see left hand side, how much they are doing at North America, how much they are doing at Asia Pacific, how much they are doing at South America, and how much total is the worldwide, right? One second, I'll show you from the financial statement. From there onward, it's being more relevant for us as an accountant. Some of the job company secretary also doing this. But all the numbers are being our responsibility. Or I can directly take this one. So here onward, this is EBITDA, profit disclosure. So all this information as an accountant, we need to prepare in the financial statement, right? This is all about management discussion and analysis. So this also you need to go through, right? So I'll be sharing this document with you, but it's been your homework for this week to go through the financial statement so that you can understand how it looks like and what exactly you need to prepare. So yeah, there you go. So we got there, almost there. So here onward is your financial statement. So first statement is consolidated income statement. Consolidated income statement you need to prepare for 3 years. Financial statement are of 2 years. In that, income and expenditure account, or you can say profit and loss account or statement of income, is always be of 3 years. Your balance sheet item would be of 2 years, but your income statement requirement is for 3 years, right? And here you will see the disclosure. So this is like other comprehensive income. In that you see foreign currency translation adjustment, defined benefit plan, other comprehensive losses, comprehensive income, which include comprehensive losses attributable to the non-controlling interest, or you can say minority interest in India. And this is your consolidated balance sheet. Balance sheet you might be seeing like this for 2 years, current year and previous year, whereas income statement and other comprehensive income would always be of 3-year presentation. So that's how your presentation and disclosure should look like in the financial statement, right? So all like how this chronologically being flowed and how it is being presented or disclosed in the financial statement is comes under the presentation and disclosure assertion, right? Got it? Yes, no?
Yes, sir.
Okay, right. So in the cash flow statement, you will be seeing like operating activity separate, investing activity separate, financing activity separate. So that's a disclosure part. Same way when it goes to notes to accounts, like this is statement of equity. You will see common stock separately, additional capital separately, retained earnings separately, accumulated comprehensive loss separately, and non-controlling interest and the total equity is separately. So this separate disclosures is called presentation and disclosure. Why it is being segregated or separated? For the user of financial statements, so that they can understand the financial statement more appropriately. All the presentation and disclosure of any financial statement would be keeping in mind the user of the financial statement, how it is adding value to the user of financial statement, how user of financial statement can understand the overall operation by looking at the financial statement. There, if you see all the accounting policies, whether it's for consolidation, whether it's for revenue, whether it's for fixed assets or it's for inventory, all need to be laid out so that user of the financial statement understand which methods, principles you have followed for the respective item, right? Then if you see here in the revenue, notes to accounts of the revenue, you will see GM North America, GM International, GM Corporate, and GM Total Automotive. In addition to that, they have GM Cruise, GM Financials, and the elimination of reclassification to reach at the final number of revenue. So that's how you need to disclose. Make sense? Now, taking you back to our notes. Here, we were discussing what? Financial statement, right? Financial statement comes as per the financial reporting framework. Financial reporting framework can be US GAAP, IFRS, NDS, or any other specified financial reporting standard, right? In that, what all things you need to keep in mind: the measurement, recognition, presentation, disclosure of all material items appearing in the financial statement. Make sense? Can you correlate this theory with the practice or practical financial statement? Or you need some more clarification? Yes, no? Applicable financial reporting framework? So far, so good?
Yes, sir.
Yes, sir.
Okay. So FASB, I think we have discussed already in detail, but quickly I'll reiterate here. It's an independent authoritative body authorized by the AICPA. Who is authorizing FASB? Who create FASB? Guys, who create FASB? Huh?
So it comes under AICP, American Institute of Certified Public Accountants.
Yes, absolutely true. So FASB, GASB, IESB, these all are bodies within the AICPA, right? And what they do, FASB, they issue generally accepted accounting principles. That is called GAAP, right? The FASB main purpose is to establish accounting and reporting standard for large publicly owned corporation whose share of stocks are traded and registered with the stock exchange, right? Next one is generally accepted accounting principle. What is generally accepted accounting principle? Is called
GAAP.
GAAP. What is GAAP in US? Called ASC, Accounting Standard Codification.
Codification.
Right? What is the full form of ASC? Accounting Standard. What's up? What is the full form of ASC?
Accounting Standard Codification.
Accounting Standard Codification.
Standard Codification. Yes. These are the basic accounting principle and standard and specific convention, rules, regulations that define accepted accounting practice at a particular time by the corporation in cooperation of consensus and suitable authoritative support. So FASB issue ASC, Accounting Standard Codification, and ASC is the main source of authoritative, generally accepted accounting principle. So you will see the question around this. What is the main source of accounting standard? What is the main source of GAAP? So main source of GAAP is ASC. ASC is Accounting Standard Codification recognized by the FASB and to be applied for the non-governmental entity. So you'll see some multiple choice question coming in this, right? The rules and interpretive release of the Security Exchange Commission under the authority of federal security law are also source of authoritative GAAP for SEC. So initially, AICPA prepare the ASC, and later on SEC, which is Security Exchange Commission, they adopt the accounting standard codification issued by the AICPA for the listed company, for the issuers. So AICPA do work majorly for non-issuer, and for the issuer the body is called SEC and their sub body is called PCOB. So the PCOB and SEC adopt the accounting standard issued by the AICPA to consider as an accounting standard for the issuers, right? Make sense? How the accounting
Yes, sir.
standard are being made for the listed company, initially prepared by the AICPA and later on adopted by the SEC. Very simple. And sometime SEC do some plus and minus also. They will not take it as it is. Sometime they do some adjustment to the original standard for listed company, for the issuers, right? So
But later on, it will be implemented by SEC, right?
yes, for the listed company, for the issuer need to follow SEC accounting standard, right? And SEC adopt the accounting standard issued by the AICPA, and they do certain plus and minus based on the requirement of the listed company. So primary source of developing of accounting standard codification is AICPA, and SEC generally adopt as it is, but sometime considering the requirement different of issuer and non-issuer, they do some customization also. Make sense?
Got it.
So main source of account GAAP is ASC, but if something is not clearly mentioned in ASC, then where should you go? Right? There might be a possibility that you come into such a new situation. For example, like in the beginning, we were discussing like earlier, we were doing like barter transaction. Then it comes currency, we start exchanging currency. Then it comes to the notes, we start exchanging the notes. Then it comes to the banking system, we start doing the banking transaction through checks, notes payable, right? Then after it comes debit card, credit card, net banking, and we started using it. Now, if you have seen in the last couple of years, there is new age currency, digital currency have taken a significant place, whether it's through UPI, right? Paytm, Google Pay, Bharat Pay, right? And then if you have seen in last couple of years, this cryptocurrency also taken place, and now NFT is coming into picture, right? So if you see, the technology is changing, transactions among the corporation, among the individuals, way of transaction is also changing. So there might not be possible that everything can be communicated or clarified in the ASC itself. Then if such situation arise, for example, if you are doing like say audit of Twitter, right? And the Twitter is, let's say, transacting in NFTs. And as of now, there is no ASC on accounting of NFTs. Then what you will do, right? There might be a possible situation like this, where you get into any such trap, where no clarification has been given in accounting standard. Back in 2012, like I was doing an audit of a company called Loyalty Rewards, right? They are based in Mumbai. So I was working with EY Mumbai that time. So we got a new client called Loyalty Reward. So they were into the business of managing the debit card and credit card companies and their reward points, right? Almost each one of you have debit card or credit card. Yes, no? You guys have the debit card, credit card?
Yes, sir.
Yeah, so when you swipe your debit card or when you swipe your credit card, you earn some reward points, right? Whether it's like loyalty reward points, payback point or maybe miles, something like that, right? Yes, no?
Yes, sir.
So the loyalty reward company is similar to that. They are managing the reward point for the banking company. So they have all the big customer like SBI, HDFC, Kotak Mahindra, Yes Bank, all these big giants, they have their customer, right? So they are managing their reward points for their customer, right? Just assume the SBI. SBI in 2012-13, when I was auditing that company, at that point of time, they were having 71% market share. I don't know currently, but at that point of time, they were having 71% market share. That means 71% of the consumer who are in banking industry were the consumer of SBI. Right after the Notebandi and after all this digitalization effort, there might be certain change, or there may be possible of significant change, right? But when I was auditing back in 2012 and 13, the 71% market share was of SBI. So that means if at that point of time, let's say we were around 120 or 130 crore people. So let's assume like if 30 crore people have bank account at that point of time, so 70% of 30 crore is almost 21 crore were banking customer of SBI, right? Such a huge, isn't it? So now let's assume 21 crore people, how many transactions in a day they would do? Billions of transactions, right? So each transaction need to be recorded by the bank, communicated to the loyalty rewards, and they will be generating the reward point. And out of those 21 crore, I'm sure some of them would be redeeming also. They will be availing the benefit of the redemption, and some of the reward point might be expiring also, right? So the previous auditor, right, I don't name it, but the previous auditor was doing the accounting based on the billing which loyalty rewards were doing to the bank. But do you feel that's how the accounting of recognition should be done? The answer was exactly no. And at that point of time, there was no Ind AS. You are using Indian accounting standard, right? And which is like at that point of time, under the transition when New Companies Act 2013 was coming in India. Right? So we are having no guidance how to deal with such kind of revenue recognition in India. Then we got to the IFRS. At that point of time, IFRS 15 just came back in 2011 or 12, I think. And there was a guidance of concept called breakage that needs to be applied to such company. So there might be a possibility that in accounting standard codification, the situation or the type of complexity of accounting you're dealing might not be there. So in such kind of situation, where should we go? And which is more authoritative, right? The first one is, have you got the example which I shared with you? Can you correlate that example with the point which I'm trying to make over here? Are you guys with me? Hello, are you guys with me?
Yes, sir. We are with you.
Yes, sir. Yes, sir.
At least two people are here with you.
Yeah, that's the difference between like studying in silos and studying in group. When you study in group, अगर एक गिरने लगता है तो दूसरा उठा देता है. So yeah, Pranjali, Santrupti, guys, Ananya, were you able to correlate with the example
Yes,
to
sir.
the point which I'm trying to make over here? So there might be a situation comes in your experience where you do not have exact guidance in the accounting standard codification to deal with. Then where should we go for the guidance and which has been considered as authentic guidance, right? So now going back to the notes. First one is SEC staff issue staff accounting bulletin. So Security Exchange Commission, right? Every day, a lot of new industries come to them for different inquiries, and they request them or they ask them to help them giving some guidance to deal with such accounting situation. So what they do, they collect all this inquiry from the industry, and they have a dedicated professional team called accounting staff. And every month they issue bulletin on the new topics and how to do the accounting of those complex accounting matters. Right? So you can refer, if you are doing accounting for a listed company, then good source is SEC staff issued staff accounting bulletin. So you can consider the reference of staff accounting bulletin that represent the practice followed by the staff in the administrative SEC disclosure requirement, and utilize SEC staff announcements. Right? If you are a listed company, you can look at staff accounting bulletin for the reference of new topic which are not there in ASC, for which the guidance is not clear in ASC. Second is observer comment made on emerging issue task force meeting to the public announcement its view on certain accounting issue to the SEC. So SEC also do have a separate emerging issues task force, right? So they have a dedicated team of professional, like for example, these days NFTs, right? And then this, because of this Ukraine-Russia war, there are a lot of new emerging technologies which are coming up, and new way of dealing with those emerging issues in futures, which like world is expecting. So how to do the accounting of such issues which are not there in my accounting standard codification. So they have like emerging issue task force. They collect all such kind of issues and do the public meetings. So you can refer to those public announcements also, right? The next one is accounting and financial reporting practice not included in the codification are non-authoritative, and the source of non-authoritative accounting guidance in the literature include the example of the following. One second. First is industry practice that were widely recognized and prevalent. So for example, in many industry, there are certain prevalent way of doing the business or doing the accounting happens, right? So you can adopt that prevalent accounting method in that specific industry. But nowadays, like things are being very much structured. If you see, do you remember like codification structure of ASC? Do you remember 900 series to 999 series? Yes, no? Do you remember this chart which we have discussed in last class?
Yes,
Yes,
sir.
sir.
What is the last one? 900 to 999 series.
Industry specific.
Industry specific.
ये तो लिखा
Yeah, sorry.
मैं कह रहा हूँ ये तो लिखा ही हुआ है जो ये बोल रहे हैं सामने, वो तो इंडस्ट्री स्पेसिफिक क्या मैं ही बता देता हूँ सर ये तो
देख लो, I am so lenient, दिखा रहा हूँ कि बोल तो दो।
दिखा रहे हो के बाद बता रहे हैं अगर कैश किधर आकर्ष ना।
नहीं, I am just testing whether you are there or not.
We are here, sir.
Yeah. Yes. So the industry practices that are widely recognized and prevalent in the specific industry. And nowadays things are being very much structured. So most of these industry guidance are already being covered in 900 series, right? But there might be possibility certain industry or maybe new emerging industry, the way they are doing accounting is being prevalent. So you can consider that as a guidance. Second is FASB concept note statement. Third is AICP also issued certain papers. So if you go to the AICP website, you will see like their issued paper on accounting matters, auditing matter, regulatory matter, tax matter. So you can consider those issue paper also as the basis of consideration. Then you can also consider IFRS issued by IASB, right? So like in our case, we have also considered IFRS 15 at that point of time, and the breakage concept in the IFRS 15, which was not there in Indian accounting standard at that point of time, right? So you can use IFRS and give reference of the IFRS. Most of the time in my practical experience, I've seen if any such situation arise, so first we consider IFRS to the extent possible, because that is being very well accepted accounting standard across the globe. So like the regulators are generally do not challenge that, right? The next is pronouncement of the professional association, technical information services, inquiry and reply from the AICPA, and maybe accounting textbook, handbook, and article. But textbook, handbook, articles are, you can say, get least weightage. The most weightage what I have seen is IFRS, industry practice, FASB concept note, or AICP issued papers, right? Make sense? If any such situation arise where you do not have clear guidance in the ASC, then where should you go for the further information to deal with the respective accounting matter, right? Make sense?
Yes, sir.
Yes.
So the appropriateness of other source of accounting guidance depend on its relevance of a particular circumstances, the specificity of the guidance, and the general recognition of the issuer or author as authority, and the extent of use of practice. But practically, I have seen like IFRS, AICPA issues, and then industry practice are more considered as authentic source, right? Next, coming to the Government Accounting Standard Board, that is called GASB. GASB is also like independent authoritative body under the oversight of AICPA, not FASB. Right? Under the oversight of FASB, yeah, that's true, but comes under the umbrella of AICPA. So FASB issue the accounting standard for non-governmental entity, and then they give the accounting standard to the GASB team to customize it for the government accounting, right? So first, generally accounting standard are being considered and prepared by the FASB, and then they give it to the GASB to customize those accounting standard to the non-government entity, so that the basic foundation of the accounting standard would remain same. So comparison would be easy between the governmental and non-governmental companies, right? Makes sense why it is being first prepared by the FASB, because for the non-governmental entity, right? And they want the governmental accounting standard should be to the extent possible aligned with the non-governmental entity, right? So that in future it will be an apple to apple comparison to the extent possible, right? Wherever it is not possible, you can't do it, but to the extent it is possible, they try to make it, right? So that is the reason first accounting standard has been developed by the FASB and it goes to the GASB. Governmental Advisory Council of Financial Accounting Foundation, that is called FAF. It is a body that authorized to promulgate standard of financial accounting and reporting for the governmental unit. It is recognized by the AICPA. Like I said earlier, it's been part of AICPA, and they also follow AICPA Code of Professional Conduct as an authorized body whose pronounced and must be followed in order to confirm the compliance with the standard rule and accounting principle rule. So this body also comes under the AICPA purview, and they are being majorly considered the same ethical and professional standard which is being issued by the AICPA, and they are mainly responsible for the governmental accounting standards, right? Make sense?
Yes, sir.
Okay.
Yes, sir.
So United States Government Accountability Office. So Government Accountability Office, also known as GAO, right? It is a body authorized to promulgate the standard that must be followed in the audit of the recipient of federal financial assistance. So GAO actually issue the auditing standard for the government body. And what are the government body? The body who receive the grant or funds or financial assistance or financial aid and support from the government. For them, when you are doing the audit, which standard you need to follow is being issued by the GAO. This is being majorly used in governmental audit. So not much relevant for accounting, but as a accounting student, we should be aware of it. Right? These standards are for the audit of governmental organization, program, activity, and function. The GAO authority derives from its position as a federal agency, and the government GAO report directly to the Congress. Congress is legislative branch of the government, like parliament in India, right? And not to the executive branch, not to the judiciary, not to the court. So they are being reportable to the Congress. Congress is what? The parliament, right? The legislative branch, but not the executive branch. What is executive branch? Is jurisdiction, that is the courts, right? So they are being responsible and reportable to the parliament. So that's just for your information purpose, not very relevant for FAR, but you should be aware of. Now next definition is IASB, International Accounting Standard Board. It is also an independent body, comes under the AICPA as a non-for-profit organization working for public interest, and its principal objective are to develop a single set of high quality, understandable, enforceable, and globally acceptable international financial reporting standard. That is called IFRS through its standard setting body. Why we are studying IFRS here? Because if you remember earlier I said in US you can follow US GAAP or IFRS. You can follow IFRS only when you have any operation outside the United States of America. If your whole operations are within the USA, then you have to follow US GAAP. But if you have some operation outside the USA, then it is being your choice either to follow IFRS or to follow US GAAP, right? Most of the time, company follow IFRS when they are planning for, let's say, investment from foreign countries, right? When their investors are of foreign country, when they're planning to do major acquisition or merger, or when they are planning to go for acquisition or merger with any foreign company, that foreign company is being using IFRS to align both of their accountings. They may be adopt to go with IFRS. Make sense?
So I have a question. So if a company is headquartered in like USA and they have a subsidiary in maybe in Europe, so they can follow IFRS for just for that subsidiary or like to the
Or
entire
both.
account?
It's for both. It's their own choice.
Okay,
Sir,
but they
actually,
can
as a
have separate reporting framework for different subsidiaries.
Yes.
It's
Yes.
possible, right?
Yes. For example, let's say I was auditing General Motors, right? General Motors have operation in 83 countries, right? Let's say GM India, they follow India's, right? GM Europe, they follow IFRS. GM Australia, GM New Zealand, they follow IFRS. But GM US, they follow US GAAP.
But when they consolidate their financial statement,
They do the conversion.
okay, and
Conversion
then
from Indian GAAP to US GAAP, IFRS to US GAAP.
okay, so finally and everything will be consolidated basis US GAAP only because
Yes,
that's
if
headquartered
the
in US.
parent company is following US GAAP.
Okay.
If GM adopted to follow IFRS, then only for the US entity they need to convert or they need to consider IFRS, and rest of the world automatically follow IFRS. So it would be more easy. But like US, they are dominating people. Right? It's their choice. Like if they have operation outside US, it's completely their choice. They can go for IFRS also.
Okay.
The
So, but
question.
what's the major difference between, like, if we on a layman language, what is the major on the face of it difference between IFRS and GAAP? What does
Yeah,
that impact the
no,
financial
it
statement?
depends on what all accounting standards are being applicable. For example, like revenue recognition. So installment sale method is completely differently treated in IFRS and US GAAP. And if you see like 5-step model, now it's being very much synchronized in ASC 606. But earlier, like ASC 605, there was so many differences between recognition of revenue as per IFRS 15 and ASC 605. And same way, like if you see the leases, so earlier there was like operating lease, finance lease, right? There was no, you can say, sales type lease in the ASC, whereas in IFRS they have sales type lease also. But now this ASC 842, which they have upgraded back in 2020, so now it's being very much aligned with IFRS. So we can go like like standard by standard. So every standard there are certain differences.
Okay.
Cool. Okay. So yeah. So now the small things. Issuer. What is issuer? I'm sure a simple question for you.
A listed company, basically.
Public
Listed.
company, public listed company.
Public listed company whose share has been listed and traded
And
in any
in the
stock
US.
exchange. Right? The Security Exchange Act 1934 defined issuer as an entity who issue or propose to issue any security with some noted exception. The term issuer replaced the term public entity or publicly traded entity. So these all are interrelated or interchangeable terms. Right? To the public entity, you can say issuer. To the listed company, you can say issuer. Or to the public traded company, also you can say issuer. But issuer is more prevalent used in USA. Like in India, we use listed company more prevalently. In US, they use issuer most prevalently. Right? What is non-issuer? The company who is not an issuer is a non-issuer. Right? Here in India, we use public company, private company, or listed company, or private company, right? But in US, we use the terminology called issuer and non-issuer. Make sense? Any doubt here?
No, sir.
Okay. So next is important term called PCAOB, Public Company Accounting Oversight Board. PCAOB was established by the Congress to oversee the public company audits, basically. So they majorly oversees the CPAs, how the CPAs are conducting jobs, they are auditing, right? So Congress formed a group to protect the interest of investor and further the public interest in preparation of audit report. The PCOB also oversees the audit of brokers and dealers. This is like this majorly, like in audit section of your exam, you might be using this terminology very frequently, PCOB. But here in accounting, it's being just for your information purpose. So in some time, you will see the reflection of PCOB is important, but in audit section, it is being very much widely used. Next is Security Exchange Commission. So Security Exchange Commission is a federal government agency. It is charged with the responsibility of writing rules consistently with federal security law, investigation of violation, maintenance of financial disclosure like PCOB, right? And then initiation of action against the violators of financial security. So the main responsibility of SEC is developing or upgrading federal security law, which is like Federal Security Act 1933, Federal Security Exchange Act 1934, or Foreign Corrupt Practice Act. And also, you can say writing and implementing the rules relating to investigation of violation, which is like Foreign Corrupt Practice Act, right? Maintenance of financial disclosure, if you have seen like SOX requirement or PCOB requirement, right? And initiation of action against the violator. So like they follow both civil law as well as criminal law, depend on you can say severity, or depend on you can say type of you can say fraud or violation that any professional or company has done for the any security act, right? SEC is being charged to oversight the Federal Security Act 1933, 1934, Federal Security Exchange Act, and Foreign Corrupt Practice Act. If you remember, in very first class we discussed all these three. So Federal Security Act 1933. So Federal Security Act 1933 consider all the rules and regulation relating to first time listing. If you need to list your company, what all rules, regulation, forms and template you need to follow, that all comes under the Federal Security Act 1933. But after first time registration, after IPO, when your securities have been started trading in the stock exchange, so what all rules, regulations, forms, template you need to follow comes under the Federal Security Exchange Act 1934, right? That's a major difference between 33 and 34. And then if you are falling into any corrupt practice, then what all like interest, penalty, or maybe like imprisonment you may have, they all comes under the Foreign Corrupt Practice Act. It's similar to Criminal Act also, right? The agency serve to govern the registration, offering, sales, etc. of the stock, bonds, note, convertible debenture, warrants, and other financial document involving investment and purchase. So these all things like SEC take care, and SEC review the registration statement of the compliance with the disclosure requirement. So once you file for the IPO, all the documentation or all financial statement requirement and presentation and disclosure is being reviewed by the SEC professional, right? And every time once you got your IPO registered and now your stock is being started trading in the stock exchange, then you have to have mandatorily file certain information to the SEC on quarterly basis, semi-annually basis, annually basis, or on event basis. Have you heard about 10Q? Have you heard about 10Q?
Yeah, quarterly filing, sir.
Quarterly filing, right? And 10K?
Annual filing.
Annual
Yearly
filing. 8K?
Special special event filing, basically.
Special
There's
event
special.
filing. Yeah. So let's say if there is a change in director, if there is change in audit committee, remuneration committee, right? Or maybe any change in managing director, such kind of things. Or maybe any new acquisition, merger, sale of assets, right? Any significant event that you need to report under 8K. So all these 8K, 10Q, 10K is being reviewed by the SEC professionals, right? So that is the main work of SEC. Any doubt what SEC mean is and what SEC do?
सर मेरा एक क्वेश्चन है
Yes,
सर
please.
जैसे हम यूएस गैप फॉलो कर रहे हैं ठीक है और सर इंडियन गैप जो फॉलो करते हैं तो सर जैसे आप कह रहे हैं ना कि उसको ट्रांसलेट करके हम फॉर्मुलेट करके एक रिपोर्ट जनरेट करते हैं तो सर उसके कंपोनेंट्स में और यूएस गैप में सर डिफरेंस भी तो होगा ना?
Yes, yes. Yeah.
तो सर वो जो बाकी के जो हाँ वो कैसे कंपोनेंट्स को हम वो करेंगे?
Yeah. So yeah, very very good question and very practical question, Kashish. So for example, let's say General Motors India and General Motor USA, right? Now General Motor India, they have their financial year April to March, right? In India, what do we follow? April to March financial year.
Yes.
But in US, we follow which year?
Jan to December.
December, right?
Calendar year.
Now, if you have seen the audited financial statement of the General Motors India were of, let's say, March 2021, and let's assume you are doing no, let's assume you have been appointed to audit the General Motor US for financial year 2022. So now you are doing a consolidation of GM India. So first thing is, if you see the GM India audited financial statement were of March 2022, right? So you would be requesting the GM India management to ensure the audit of financial year rest of the 9 month also, right? First thing is that is a major difference, because 9 month is a major period, right? If it would be of like September year end, 3 months might be considered as a minor period, and then you can look at the materiality, how material it is, right? But now in this scenario, first thing is like need to get it done, audit. Second thing is, like if you see in India for, let's say, depreciation policy, so company might be using company laws, right? In India, let's say they are depreciating plant and machinery over the period of 20 years. Whereas in US company, they follow 10-year depreciation. So there might be a possibility an Indian company has considered less depreciation compared to the US company, right? Yes, no? So
Yes, sir.
first, they need to make that top-up adjustment. That is called adjustment on conversion, right? In US, the LIFO method of inventory valuation is acceptable, whereas in India, LIFO method is not acceptable. In IFRS also, LIFO method is not acceptable. But now to convert the inventory valuation and the COGS to the US GAAP, the company GM India need to convert their inventory from FIFO to LIFO method, right? And it will impact their cost of goods sold also, right? Whatever is the impact that comes as an adjustment, GAAP conversion adjustment. So for every item, every line item in the financial statement, we need to look at the accounting policy of the US company and the accounting policy of the Indian company. Whereas wherever there is a difference in the accounting policies and principle and method, there would be an adjustment that need to be come into the adjustment statement for the conversion from Indian GAAP to US GAAP or IFRS to US GAAP. Make sense?
Yes, sir. Got it.
Ananya, Prashant, Akash.
Yes, sir.
I have a question, sir.
Yes,
This
please.
PCAOB also oversees the audit of broker dealers.
Yes.
what does this mean actually?
Broker dealers means like the stock brokers basically. Like in India, you have Sher Khan, right? And you have �𝐼, right? So similar kind of agencies who are like brokers and dealers for the stock exchange, who get the license from the stock exchange where people can do the trading of the stock exchange.
Okay, got it. Thank you.
So SEC does not determine whether the information provided to the investor is accurate or truthful, nor does SEC determine whether the terms of offering are fair or reasonable. So that's being the responsibility of management principally. The mission of SEC is to protect the integrity of capital market through enforcement of financial disclosure law that apply where business entity attempt to raise the capital by selling the ownership to the investor. So SEC job is to provide the law, financial law, which will be enhancing the disclosure requirement. If you see like SOX, have you heard about SOX 404? Have you heard about SOX 404 requirement? Enhance financial statement
Yes, sir.
disclosure.
Management responsibility समझ
No. Enhance financial statement disclosure. So that is coming from the SEC. So SOX is what? SOX is an act issued by the SEC. right? In that, they come up with a specific section called Section 404. In the 404, they mandate certain financial disclosure for the listed company, for the issuers, right? So that's how SEC work. They make the rules for the financial disclosure. They make the laws for the financial statement disclosure, which the company need to adhere, right? SEC define what information prospective investor must receive from the offerer and what information the entity must continue to report in their shareholder if the entity has a certain number of owners. So what all disclosures are being required for IPO, right? The forms and template is being defined. Those information are being issued by the SEC, right? Same way, once you get registered yourself with the IPO, then this 10K format, 10Q format, 8K format, it is being defined by the SEC, in which the company need to provide the information to the user of financial statement, right? So now let's understand the structuring of SEC. SEC is the Security Exchange Commission. This is a nodal agency. This is a federal government agency, right? This SEC Commission has created these three laws. First one is Federal Security Act 1933, right? What Federal Security Act do? 1933. What comes under the Federal Security Act 1933?
First time listing, basically.
Say that again.
So first time listing of securities.
Yeah.
So it's basically was registration.
Registration of new security and first time listing of security, or you can say IPO, right? Initial registration of security, IPO or private placement security, right? Liability of the company, director, officer, and CPA. These all need to be these all comes under the Federal Security Act. Second act they have passed is Security Exchange Act 1934. What all comes under the Security Exchange Act 1934 and to whom it is being applicable?
So once the IPO is registered, and we will see like what are the stocks traded in the stock exchange and what are the templates and what are the formats that need to be followed post that.
Yes. Anyone else would like to add? Gurmehar, Ayush, Pranjali.
So basically, the administered the trading of those stocks. So basically, once it has been listed, the reissuance and the trading of those stocks are being administered by this act.
Yeah. So Security Exchange Act 1934 is being applicable to the company whose stocks are being traded in the stock exchange, and they need to submit certain mandatory information on a periodic basis to the public at large as well as to the SEC, which include 10K, 10Q, 8K forms, right? Third act they come up in 2002 is the SOX, Sarbanes-Oxley Act 2002, which is being further amended in 2013. Right? This SOX Act has further formed a committee called PCAOB. What is PCAOB? Public Company Accounting Oversight Board. Right? So the PCAOB comes through the SOX Act. So why the SOX Act came in 2002? Any idea?
Because of the frauds which are there
Because of the
coming up in the industry. So,
yes,
so it always strengthened.
Yeah, because of the financial frauds taking a place in 1990 to 2001 significantly, whether it's like Amrons, whether it's Lehman Brothers, whether it's like there are so many financial scams were happening in that specific decade, right? And that is impacting to the public at large, because in the stock market public at large do the investment, right? To protect the interests of the investor who are public, general public of the United States of America, they come up with the SOX Act 2002, which is now recently amended in 2013. So the SOX has formed a committee or a body called PCAOB to regulate. To regulate whom? PCAOB regulate? Any idea? To the CPAs, basically.
CPAs.
To
So
the
basically,
auditors.
so we are afraid of like CPAs are afraid of PCOB and the companies are afraid of SEC.
Yes, absolutely right. And I am fortunate enough to pass 3-time PCOB inspection in my life. So first inspection I gone through in 2009 when I was auditing for Goodyear India and Goodyear US. And second inspection I passed in 2013 when I was auditing GlaxoSmithKline. And third inspection I passed in 2019 when I was auditing General Motors. And luckily all three we got 5-star rating. And we got special bonus. So I have a good experience working with PCOB and direct experience, because like when 2009 I was like just a senior, right? At that point of time I may not have too much direct experience or exposure to working with PCOB, but in 2013 I was manager with the EY when I had an experience working with it, and the third time I was like senior manager with the EY US, and I was directly managing the entire PCOB team. So I have like all kind of experience working with PCOB, and it will definitely help each one of us as and when we go through the respective part of the exams or respective topic. I'll definitely share my experience how we dealt with those PCOB inspection in such situation. Right. So now coming back to the education. So in SOX 2002 and 2013 amendment, what is the objective they fulfill? Right. First one is oversee the public company audits to protect the interest of the investor and public at large. Right. Then Investor Protection Act that enhance and develop the standard for all US public company, board of director, management, and the CPA firm. Issues auditing standard for the public company, right? So for non-issuer, AICPA issue auditing standard, which we have studied earlier, right? PCOB adopt those standard and do the customization and consider those standard would then be considered as a PCOB auditing standard. So for all the issuers, if you are being an auditor, you need to follow PCOB auditing standard. For non-issuer, AICPA auditing standard. But what is the difference between AICPA auditing standard and PCOB auditing standard? Is same how the FASB accounting standard and GASB accounting standards, or FASB accounting standard or SEC accounting standard, right? So it is being adopted by them, and then they do certain customization based on the need of the issuers, or the difference between the issuers auditing requirement and the non-issuers auditing requirement, right? Then quality check, ethics, and industry specification, and then registration of the public accounting firm. So these are the primary responsibility under the SOX Act 2002, which is being amended in 2013, and they have made a body called PCAOB to do all this work. Make sense? So what is SEC? Security Exchange Commission, right? Majority of their work comes under the Federal Security Act 33 and Security Exchange Act 34 and the SOX Act 2002, which is amended in 13. Everyone good? Yes? No?
Yes, sir.
Yes, sir.
So I think it's been almost 2 hours. You are feeling drowsy. Shall we take a break over here? And we can come back at 12:35.
Done.
Yes, sir.
Huh?
Sure, sir.
Okay, enjoy your lunch, brunch, tea, coffee, and let's come back at 12:35.
Sure, sir.
Okay, sir.